Hey, what's up guys, Naam here, and today I'm going to be giving you my 7 top stock picks to hold for the long run. So you guys might be aware that the stock market did plummet a few weeks ago, but there are signs of recovery so far since America is starting to open up their doors again. So in this video, I'll go over the fundamentals and technicals of each stock so you have a full grasp of why I'm investing in or considering adding to my positions. So here are a few things that I look into before investing to a stock for the long term. So I'll take a look at their fundamentals. So this includes their income statements. I take a look at their revenue to see how much money that they're actually making in total. I also take a look at the gross profits, which is the amount of money that they make after the cost of goods are sold. And lastly, on the income statement, I do take a look at their net income, which is the amount of money that they make after their overhead, which includes their employees, their taxes, their marketing, pretty much everything that they need to do to sell the product. So with the fundamentals, I also take a look at the operating financials. So I tend to look at their gross margins. So this is the percentage of money that they're earning on a yearly basis. So for the gross margin percentage, you want to see a number that's consistent throughout the years. So another thing that I like to look at in the operating financials is their net margin percentages. So what net margins are is the percentage of money that they get to keep. So year after year, you want to see this consistent or going in an uptrend. So to see how this stock compares to its competitors, I tend to look at its profitability ratios. So profitability ratios see how this company compares to companies within its sector and also within its industry. So with the fundamentals out of the side, now let's talk about the technical analysis. I'm not going to go in too much detail of how I do technical analysis, so I'll just give you a brief overview. So me personally, I just follow the trends. There's 3 indicators that I use the most. I typically use the Ichimoku cloud system, the MACD, and also the RSI indicators. So I'm not going to go into too much detail of how to use these indicators. So I'm pretty sure you can find a YouTube video to see how to use each one of these. So I'm just going to tell you how I use them and how I use them to enter my positions. So just as a reminder, it is nearly impossible to time the market, even though you use indicators, fundamentals, technical analysis, because the stock market can be irrational. Because even with technical analysis, you really couldn't predict the COVID-19 crisis. Yeah, you could have followed the news and maybe think that the stock market might go down, but just technical analysis alone is usually not enough. So now you guys know how I analyze my stocks. Now let's go over the top 7 stock picks I have for long-term growth. So before we start, I got to put the disclaimer out there. Always do your own research before investing into any type of stock. The information presented here are just for entertainment purposes only. Even though I'm investing with my own personal money, you should always do your own research before investing. So let's take a look at our first stock. It's going to be Microsoft. So Microsoft is an American multinational company. If you guys are aware of Bill Gates, he was the founder of this company. They manufacture, license, support, and sell computer hardware. They do have a dividend yield of 1.2%, which is not too bad. Me personally, I really don't look at dividends that much because for me to do technicals and fundamentals together, it's hard for me to consider the dividend yield. I'm not saying that's a wrong thing, but that's just not how I invest. Let's take a look at the 5 years. So as you can see here, it's going in an uptrend, which is what you want to see for any type of stock that you're going to be buying. Some people take a look at PE ratios. I typically don't. That's just how I personally invest. So it's really up to you if you guys want to. So let's take a look more at the fundamentals of Microsoft. So for Microsoft, let's take a look at their income statement, annual reports. So let's take a look at the revenue for the past 5 years. You see 93, 85, 89, 110, 125. So that's a good sign. Revenue is pretty much increasing every single year for the past 5 years. Let's take a look at their net income, 12,000, 16,000, 21, 16, 39. So they are having consistent net income growth every single year as well. For 2018, they did have a little bit of a dip, but they almost doubled that in 2019. Now let's take a look at how it compares to its competitors. So let's take a look at the profitability ratios. So gross margin after 5 years, the company makes around 63%. So industry is 70, sector is 52. So it's in the technology sector and industry is software and programming. Let's take a look at the net margin. So about 20%, industry is 15, sector 14, so it's making a lot more money compared to its competitors. So it can actually undercut a lot of their pricing. So now let's take a look at its operating performance. So for gross margins, 2015, 2019, around 64, 62% almost. Pretty consistent, hasn't changed that much throughout the years. Net margins went from 13, 19, 23, 17, 31. It seems like 2018, it did have a year where their net income was a little bit lower, as you can see in the income statement, but it's doing relatively pretty well. Now let's look at the technical aspect of Microsoft. Let's take a look at the month first. So as you can see, all the way back here in the dot-com bubble, it took a while for it to recover. It really didn't move that much. 2008 financial crisis, it dipped down. Right after the financial crisis, it just went parabolic. As right now, you see this green cloud up here, it means that it's in a bullish trend. The baseline and the conversion line is still in an uptrend, so It's still going up. This does not necessarily mean that it's going to go up forever. You want to follow the trends. If it's going up, you want to invest while it's going up. So let's take a look at the weekly charts. So around March 16th, that's when it got its all-time low, but seemed like a bounce right off the cloud, and it's starting to recover from that. It looks like it's going to probably dip down just a little bit lower. I imagine it's probably going to dip down probably to 160 or so. I'll probably just wait just a little bit more just to enter. Even right now is not a bad position to enter anyways. It looks like a V-shaped reversal. You could possibly just dollar cost average. That's what I tend to do for entering any type of position, just to limit my risk. So let's move on to the next stock, which is going to be Apple. I'm pretty sure everybody's aware of what Apple is. They design iPhones, iMacs, everything that's Mac, basically, iTunes. Over the past 5 years, there has been consistent growth. So let's take a look at the income statement, annual reports. So ever since 2015, 233, 215, 230, 265, 260. So you can see that the total revenue is going up, but just at a much slower rate. Let's take a look at the net incomes. Net incomes 53, 45, 48, 59, 55. So it's pretty much following the gross profits as well. So it is growing up, but just at a much slower rate. All right, so let's see how Apple compares to its competitors. So for the gross margin 5-year average, the company has around 38%. Industry is 39 and 52 for the sector. So it's in the technology sector and computer hardware. Let's look at the net margins, 21%. Industry is 16, sector is around 14%, so it's basically killing it in net margins. So it's making more money than most of its competitors. It's keeping up with the S&P 500 actually. Let's take a look at the operating performance of Apple. So for gross margins, it's around 40, 39, 38, 38, 37. So gross margin is going down and down. It's possible the competition, or they just have to lower their prices. I'm not sure if you guys are familiar with that new iPhone that they're releasing. I think it's the iPhone SE. I think it's like $400 now. They're basically just undercutting most of the phone companies out there right now. Net margins been pretty consistent, even though the gross margin percentage is going down. 22, 21, 21, 22, 21. So net margin percentage is doing great. Let's take a look at the technicals. So as you can see here, it's still an upward momentum trend right here. It's going up. So ever since the financial crisis, it just kept going up. There has been a couple dips here and there. So this could be a possible recent dip due to the COVID-19. So for the weekly charts, it's still showing bullish signs, even though it did go down due to the pandemic. Actually, this could be a possible good entry point right here. If a stock just bounced from a low point and going back up, I tend to enter, and I always typically have a stop loss. That's more for trading, but if you're planning to invest in the long term, you may not want to use stop losses. So this is not that bad of an entry position right here. All right, so the next stock that we're gonna be looking at is Adobe. So Adobe is a computer software company. They make multimedia and creative software, which like Adobe Premiere, Photoshop, Lightroom, all of those creative suites. They're the creators of that. They don't have a dividend yield. So let's take a look at the financials. So income statement, year after year, they've been making consistent gains. So since 2015, 4,005, 7, 9, 11. So just remember, this is in the millions. So that's like $11 billion. So which is pretty great. Let's take a look at their net income. 600, 1,000, 1,006, 25, 29. So year after year, their net income has been growing as well. So let's take a look of how it compares to its competitors. Let's look at the profitability ratios. So gross margins, 85%. Industry is 70%. And also sector is 52%. Is in the technology sector, and the industry is software and programming. Net margin is 22%, 15 for industry and 14 for sector. So it's basically killing it as well in its niche. So let's take a look at their operating performance. So let's take a look at the gross margins, 84, 86, 86, 86, 85. So fairly consistent, which is great. So the net margins is actually growing year after year. That's a very good sign. So this company is doing really, really well. Let's take a look at its technicals. So monthly first, like every tech company in the dot-com bubble, went down. Financial crisis, it dipped down. But ever since after the financial crisis, it went parabolic. It went all the way up. So weekly here. So as you can see, this little red cloud here, that is a bearish signal, but it does not necessarily mean that it is bearish. Bearish just means that the stock is going down or in a downward trend. If you take a look at the MACD here, it's getting very close, possibly a reversal. So there might be an upward push. RSI is pointing downwards, but it's not overbought or oversold. So I'll consider Adobe a pretty good purchase actually. So our next stock is going to be Abbott Laboratories. So if you guys are familiar, Abbott, they came up with this new testing for the coronavirus where you can get a result in like minutes, I believe. So they're doing really well during this pandemic. So they do have a dividend yield of 1.57%. Now let's take a look at the financials part of it. So let's take a look at the total revenue. So annual 20, 20, 27, 30, 31. So it has been growing consistently year after year as well. For net income, 4,000, 1,400, 2,000, 3,000. So as you can see here, there was a downtrend. Then there was a boost up. As a reminder, when net income is going down, that does not necessarily mean that it is a bad stock. Since even though year after year it's having a consistent growth in revenue, usually with big companies like this, they would just reinvest all of their earnings inside the company, either better technology, manufacturing equipment, or just investing into better people. Just because net income is either low or in the red does not necessarily mean it's a bad thing. If you take a look at like Tesla or Amazon, like there was years where they did not have any net income just because they were just reinvesting all of those earnings into the company. So let's see how it compares to its competitors. So for Abbott Laboratories is in the healthcare sector, industry is in the major pharmaceutical preparations. Gross margin is around 57%, industry is 66, sector is 60. So it's right up there. It's not too low. Let's take a look at the net margins. It's almost 9%, or as your words, almost 10%. It's doing much better than its competitors in its industry and sector. A little low to S&P 500, but that's kind of expected since that's an overview of all the 500 stocks. So for operating performance, gross margins around 57, 56, 54, 58, 58. So pretty consistent. So for net margin percentage, 2015 was 21, 6, 1, 7, and 11. So as you can see here, there was a little bit of a downtrend. Then it went right back up. As I mentioned earlier, net income that's going down does not necessarily mean it's a bad thing. It just means that the company is just reinvesting more of its money. So let's take a look at the technicals. Let's take a look at the monthly first. Dot-com bubble went down, but it really didn't affect it as much. Let's look at the financial crisis. Financial crisis, it went down, but after like 2 years, it basically just recovered. There was a little bit of a downturn right here in 2015 to almost 2017. It was still bullish though. You see this big green cloud here? It's still in bullish territory, so it's still in an uptrend. And you can see this big spike here. This is when they released the news that they developed this new machinery for the coronavirus testing. So for the weekly, even since 2017, it's been growing consistently. So there's this big spike here. That's when they announced the news. It's not overbought or oversold. So me personally, I think this is going to go down just a little bit more. So possibly around, let's see, $82 or so. So since this is a bearish candle, meaning that the price is going down a little bit more, I would just wait just a little bit more before going into a position. Again, you really can't time the market. I don't know if I'm going to be right or wrong. If you dollar cost average, just invest a little bit every single week. So it just limits your risk. So the next stock that we're going to be looking at is going to be United Health Group. So United Health Group, they are a healthcare product and insurance service company. So this is actually one of the largest healthcare companies in the world by revenue. In 2019, a revenue of $242 billion. Let's take a look at the past 5 years. Dividend yield is 1.5%, not too bad. As you can see here, it is in an uptrend. It seems like it's been leveling off. Let's take a look at its financials first. So for 2015 all the way to 2019, so 157, 187, 200, 226, 247. So they've been killing it in revenue. Let's take a look at the net income. 5,000, 7,000, 10,000, 12, and 14. So even year after year, their net income has been increasing as well. So let's take a look at how it compares to its competitors. So this company is in the financial sector, and the industry is accidental health insurance. So gross margins is 23%, industry is 24%, and the sector is 51%. So it's killing it for its industry. Sector, not so much. Let's see their net margins. Almost 5%, about 4.86. For its industry, it's doing pretty well. For a sector, not so much. Let's take a look at its operating performance. So UNH. So for operating performance, gross margins 23, 23, 22.9, 23. So pretty consistent year after year. Net margins, they've been growing year after year as well. So 3, 3.8, 5.2, 5.3, 5.7. So year after year, they're keeping more and more of their money. So let's take a look at their technicals. So as you can see in the monthly, during the financial crisis, it went down quite a bit from 56 all the way almost to 13, almost like, I was like, what, like 80% down? But ever since then, in 2010, 2009, it's just been parabolic, basically. It's been in an uptrend. If you look at the monthly charts, it is in an upward trend. Cloud is green. all the signals are pointing up. Let's take a look at the weekly. The weekly is a little bit more choppy. The last time there was highs 2018, 2020, just recently. So as of late, it's almost at its high once again. This looks very choppy to me. If you're trying to trade this, it might be kind of difficult to time it correctly. But if you're investing for the long term, I would just dollar cost average in. All right, so let's take a look at our next stock. This one is going to be Clorox. So I'm pretty sure everybody's familiar with that. They make cleaning supplies and they recently just had a lot of publicity. As a disclaimer, everybody do not drink or try to inject bleach, okay? So let's take a look at the dividend yield. It's actually pretty good. It's 2.27%. Past 5 years, upward trend consistently. So it's been doing pretty well. Let's take a look at its financials. So let's take a look at the gross profits. 2 billion, 2.5 billion, 2.6, 2.6, 2.7. So this company is growing. Just a little bit slower, but it is growing consistently, which is good. Let's take a look at the net income. Net income is 500 million, 600 million, 700, 800. So their net income is great. They're keeping more and more of their money. So let's take a look at how it compares to its competitors. So profitability ratios. So the sector is basic materials and the industry is chemical manufacturing. So for gross margins past 5 years, 44%. So for industry and their sector, they're freaking killing it. Net margins is almost 12%. They're pretty much just killing everybody else in the sector and industry. They're doing great. Let's take a look at the operating performance. So for gross margin percentage, around 43, 45, 44, 43, 43. So pretty consistent gross margins. That's what you like to see. Net margins, 10, 11, 11, 13, 13. So year after year, they're keeping more of their money, which is excellent. Let's take a look at the technicals. So even the 2008 financial crisis, it really didn't affect it as much compared to other companies. I think since this is like a household cleaning item, it doesn't really prevent people from cleaning their homes or just disinfecting. Even during the pandemic, of course, bleach and all the cleaning supplies, they had a big boom. So the last real dip was the dot-com bubble, really. Let's take a look at the weekly. So as you can see here, it's kind of choppy. Green cloud, bullish signal right there, but it has gone up quite a bit. For me, I would kind of wait until it reaches like almost 180 a little bit. It's at 186 right now. But again, if you're investing for the long term, not a bad position to buy in anyways. So our next stock is gonna be Visa. Let's take a look at that. So Visa is a financial company. If you guys are aware, if you guys have any type of plastic debit card, credit cards, Visa is accepted worldwide. So it's pretty much everywhere nowadays. They do have a dividend yield of 0.7%, really not that much, but past 5 years, it's been doing pretty great. Let's take a look at its financials. So for revenue, so 13, 15, 18, 20, 22. So they're doing great year after year. Let's take a look at their net income. 6 billion, almost 6 billion, greater than that. Yeah, 6.6, 10, and 12. So year after year, they're keeping more and more money. So let's see how it compares to its competitors. So gross margin after 5 years. Too bad it doesn't show that information. How about net margins? So 44%. Dang, that's a lot. So within this industry and sector is basically doubling everything there. It doubled the S&P 500 as well. So let's take a look at the operating performance for Visa. Gross margin, so 81, 81, 82. So pretty much consistent year after year. Net margins, 45, 39, 35, 48, 52. So there was a couple years that it was going down, but since of 2018, 2019, it has been going up. So that's an excellent sign as well. Let's take a look at the technicals. So monthly, since its conception basically in 2008, dude, it's just been going up. So it's been going up basically for the past 10 years. So a retrace down here. So this could be a great entry point. So you want to buy the dips, right? But again, when you buy some things that are cheap, sometimes it can get more cheaper, okay? So for the weekly, you can see this little red cloud right here. That basically shows that it's in bearish territory, so it's going in a downtrend. So it's not overbought or oversold. The MACD looked like it's almost converging or getting very close to cross. Me, honestly, I wouldn't enter just quite yet. I would like it to just get up above the 173 entry level. But for the long term, who cares, right? You can just dollar cost it. So if any of you guys are wanting to invest into any of these stocks, consider using the WEBULL app, because when you sign up, you guys get a chance to win 2 free stocks value up at $1,400. So you get money, I get money. It's basically a win-win situation. And if any of these stocks are out of your price range, you can always use M1 Finance. This is where I personally invest in for my retirement account, just due to the fact that you can buy partial shares and it makes it pretty easy to invest consistently. All right, guys, so that pretty much does it for me. If you'd like me to do more in-depth stock videos, let me know in the comments. If you haven't already, make sure you give this video a like, because that'd be much appreciated. Subscribe so you don't miss out on any future videos. If you want to hang out with me some more, check out my videos over here.